Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates are, which way they're moving, and what we expect to happen, at least in the near future, by looking at some of the upcoming economic reports and kind of what we think is going to happen with that. Today is October the 24th, 2022. It is now 3:07 p.m. Central Time, and unfortunately, home loan interest rates are not moving in the direction that we want them to move. Make sure that you like, subscribe, and share to the YouTube page. Should be accessible at the link there up in the top corner for more information about some other details that I've been putting out recently. Currently, we are down 12 basis points on our mortgage-backed security that we've been watching. Not a huge move, but unfortunately just not in the direction things need to be moving right now. The 10-year Treasury is up 3 basis points, currently at 4.24. Unfortunately, above that 4.2, which was the last ceiling that we kind of did not want to break through, and now it is acting as a floor to us. Taking a look at the charts right here, you can see we're between a wide range with this ceiling above and this floor below. Unfortunately, today we're drifting down, and overall home loan interest rates are not liking that. Now, what is going to be coming later in the week, which is going to make some impact, is the personal consumption expenditures report is coming out on Friday. This is the Federal Reserve's favorite measure of inflation. So we need to be looking at that very closely, and we'll talk more about that later in the week as that day comes closer. Where are we currently on our home loan interest rates? Well, let's pull up the Brent Bruce Daily scenario, which again, as we all know, is the very well-qualified 30-year fixed conventional home loan with my company. Let's take a look. Now, there we are. We ended on Friday at 6.99%. And we talked about that the banks were doing everything possible to hold on to that 6.99% and not have to go into the sevens based on the margins and the way that I have structured things. Unfortunately, we're at 7.125 right now. So just that little drop down here, that 12 basis points, is just not showing enough positivity to hold on to that 6.99 or stay in the sixes like we were hoping we would. Now, banks are getting ready and kind of anticipating what's going to happen with the personal consumption expenditures report. So we might see throughout this week banks kind of hedging their bets and leaving rates a little bit higher until they get that report, until they're able to digest that report and see which way we're going to go from there. Now, we've been talking about, let's see if we were to pay just a little bit under a point here, 0.787 in cost, we're at 6.875. Okay, so that's what it would cost to get really into the sixes. Maybe for $1,476, we could be at 6.99 based on the Brent Bruce Daily scenario. So let me open this up for compliance so you can see what we're looking at here. All right. So keep in mind that my projection has been consistently that if we get into the sevens, it will be very short-lived, that we'll be back into the sixes quickly. We are in the sevens right now. Okay, obviously we've just kind of been bouncing up into the seven and back. Now we're up into the seven, and hopefully by tomorrow we'll be back. But overall, the goal at this point is that we will be there for a very short period of time. But unfortunately, we have a personal consumption expenditures report that we are not anticipating to be very helpful. So we're going to see if the overall markets have already considered these numbers and baked that information into their pricing, or if we might be staying in the sevens for a while. I will keep you posted. Let me know your thoughts, your questions, your comments, and make sure that you share, like, and subscribe. Have a great day.